Hello everybody, welcome back. So I'm going to show you another way to use the Ichimoku cloud. So the first tutorial was about a trending signal, so getting in at the bottom of a trend, getting out towards the top of a trend, and the Ichi cloud gives you the entry point and the exit point. This time is more of a pump signal, so this will tell you if there's going to be likely to be a pump or even a dump. You can play it for longs or shorts, and again it works on all time frames, 5 minute, 15 hourly, 4 hourly, daily, whatever. It'll work on all time frames, and I've used it many times over the years. It's one of my favorite indicators, and I couldn't really give you an accurate statistical breakdown of how often it works, but just off the top of my head, I'd say it'll be over 70% of the time it works, which again, it's pretty good. It could even be more, like I say, in my experience, that's how it works, and that would be mostly in crypto. I would probably make the case that you probably see it would work more frequently in something like Forex markets, which is why I've brought up the USD to GBP here, so bit of Forex for you. I think the reason for that is just because of liquidity, basically. It's a multi-trillion-dollar, daily trading volume in Forex, whereas, if we're looking at cryptos, not so much, and especially with altcoins, sometimes it's pathetic volume, so you can't really expect indicators to pay off in the same way. So lots of crypto YouTubers out there talking about the cloud, completely inaccurately, which is why I've decided to make these two videos about how I use it, how it's supposed to be used. The cloud isn't support or resistance; it means nothing. It's not what it's about. So in this specific signal, we're going to think about longs, because this is the setups that we've generally got for a market that looks like this. You're not going to get many shorts in here, so we'll think about longs in this instance. So there's 4 components for this signal, and you've got to wait for all 4. You have to have the discipline to wait for all 4. You can't anticipate something happening. It has to be present on the chart, otherwise you can't take the trade. So the first thing, in no particular order, doesn't matter what order they find themselves in, so long as they're all present at the same time. So the first thing we're going to think about is the cloud. The newly formed portion of the cloud, or the cloud that's ahead of us, has to be green for longs. So we got that, that's fine. The next thing would be we have to have the price above the cloud, which is fine, we're above the cloud there. The next thing would be your Chiku span, your conversion baseline. So the conversion line is this blue, and the red is your baseline. That has to have a cross, and this cross can happen above, inside the cloud, or below the cloud. It doesn't matter in what order, so long as there's a cross. It's not particularly bothered at all where the crosses happen, so long as it's crossed and diverging. And the last thing would be your Chiku span, which in this instance has to be above the cloud, right? It has to be above the cloud, and we've obviously got that here. So we've got 4 components here to generate the last signal. Let's have a look how that played out. So the last thing we would have waited for here would have been the cross. The cross would have generated at this candle body closure and this one open, so you would have taken the trade, and so far that trade is currently at just below 1%. We'll just say 1%, just below 1%. It had been up a little bit higher than that, but it's just above 1%. Now listen, this is Forex market here, we're not talking about altcoins or anything like that, so yeah, you're going to get smaller returns, but they are frequent and reoccurring, and again, this does happen in crypto. I use it all the time in crypto, but we're using a Forex market just to show how frequently it does play out. So there's one, and we've managed to get a pump. And it's for you to determine when to take profit on that. It's not going to this setup won't tell you when to get out of the trade, unlike the previous one that I explained. So let's backtest this another time. So let's have a look at this one. So we've got a cross below the cloud here. So the price has to be above the cloud, which it would have been at the time of the cross. Let's backtest the Chiku span, which is always 26 periods behind. So where was the Chiku span at the time of that cross? Okay, so it would have been here. Okay, so this wasn't above the cloud. It got above the cloud here. So then in this case, then let's just measure this 26 periods in front. So 26 periods in front would have been here, where we managed to cross above the cloud. We would have waited for this candle body to close and this one to open, and we would have taken that trade. Now it would have gone up by a little bit, and then it went down to the tune of what? 0.5%, just less than 1/4%, 0.2%. This is why you should always want to employ stop losses. But then it recovered and moved all the way up from the bottom to the top, gain 1.5%. So that's not too bad. Right, let's backtest this once more again. That was slightly different because it was below the cloud, but it doesn't matter. It does not matter where it happens. Really does not matter at all where the cross happens. So let's have a look. So this was a big move. Did the Chiku span? Did the Ichi cloud tell us where this was going to happen? So let's have a look at this. So we've got a cross here above the cloud. That's good. Price is above the cloud as well. So we've got obviously the green. We're making a cross. We're above the cloud with price action. You just have to ask, where's the Chiku span at this moment in time? 26 periods behind. Let's have a look where it was at the time. So this is where the Chiku span poked its little head above, just there. So this would have been a signal at this very moment in time. So let's think about that. So there's your cross. You would have taken the trade on this candle body open, and lo and behold, that is almost a 5% move that was given to you just on the back on that signal. So as you can see, like just from looking at these, just this last, what was this? This last few days worth of price action. Not even that, isn't it? Really? Yeah, the last couple of days worth of price action. A couple of weeks, sorry, of price action. Some pretty good results on a boring old Forex chart there. That is how you do this setup. Anyway, this is how this one is done. Let's just see if there was a short signal generated at any point. There would have been around here actually. So we'll just do this and then we'll wrap it up just to give you the show you how it can work in a short. So again, this is an uptrending market. It's not the sort of thing you'd really want to short, but if you were brave enough to use the indicator, you could have probably tried it. So we've got a cross here. Again, this is above the cloud. It doesn't matter where the cross is. So a cross here. So what we'd need to wait for now would be a red portion of the cloud, which is obviously all the way over here. The price closing below the cloud this time, and the Chiku span closing below the cloud. So we've got the cross. That's fine. The cross was here. So we'd wait. Where was this Chiku span when it came out of the cloud? That probably would have been the last thing that we would have been waiting for. 26 periods behind would have been on this candle body close and open. So again, you would have made the trade on this candle body open. You would have come down a little bit, you would have gone up a little bit, and then you would have caught the entire rest of the move that played out to the tune of, where was that? That was this candle body roughly, wasn't it? So that short would have generated a 1.3% move. It works for shorts, works for longs, works on all time frames. But like I say, if you're trying to use it with altcoins with very, very small liquidity, I would take it with a pinch of salt, but that is how you use this indicator. So all these freshly faced young curly haired YouTubers that talk about the cloud in a different way, that's not how it's supposed to be played. It's a signals indicator. In many ways it's a leading indicator. It gives you an entry point, gives you a signal to trade. It's not about supports and resistance. It's nothing to do with that. It's a signal indicator, and this is how you would play a pump or a dump signal based on the Ichimoku cloud. Hopefully that has been useful. Please let me know if it has, or if it hasn't. I don't mind. Anyway, thanks for watching. Hope you have a nice day and take it easy.